Have you ever applied for credit, a home loan, a car, even a store account, and been told no, simply because you have no credit history? It's one of the most frustrating financial catch-22s in South Africa. You can't get credit without a history, but you can't build a history without getting credit. And here's the thing, millions of South Africans are stuck in exactly that loop right now. Hardworking people who are invisible to the credit system simply because they've never used it. But that changes today, because the truth is this, you don't need lots of debt to build a credit score. You need responsible payment history. That's it. The system isn't measuring how much you owe, it's measuring how reliably you pay what you commit to. And that is something every South African can build, starting from zero, starting right now. So, let's get into the 5 realistic steps that will take you from no credit profile to a solid, healthy credit score. Step 1. Open one small retail account. This is the most accessible entry point into the credit system for most South Africans, and here's why it works. Retailers like Woolworths Financial Services, Edgar's, Truworths, and Jet have credit products specifically designed for people who are just getting started. The qualifying criteria are generally more lenient than a bank credit card. You don't need an existing credit score to get one, and once your account is open, it's reported to the credit bureaus every single month. That monthly report is the whole point. Every month that account is open and in good standing, a positive data point is added to your credit profile. Over 6 months, 12 months, 18 months, that history starts to carry real weight. But here is where most people go wrong. They open the account, they spend more than they planned, and then they carry a balance they can't clear. Suddenly, what was supposed to build their score is hurting it. So do this instead. Use the account for one small, planned purchase, something you are already going to buy. Keep the amount low enough that you can pay the full balance the following months, not the minimum payment, the full balance. Do that consistently, and you are building exactly the kind of history that credit bureaus reward. Controlled usage, full repayment, month after month. One account, keep it small, pay it in full. That's the move. Step 2. Build a healthy banking record. Now here's one that surprises people, because your bank account doesn't directly appear on your credit bureau report. So why does it matter? Because when you eventually apply for meaningful credit, a home loan, vehicle finance, a higher credit limit, the lender is going to ask for your bank statements, 3 months minimum, sometimes 6, and what they see in those statements will either support your application or quietly kill it. A bank account that shows debit orders bouncing, an overdraft you never climb out of, and a zero balance 10 days after payday tells a lender one thing: this person struggles to manage money. That perception can override everything else, even a decent credit score. But an account that shows consistent income, stable spending patterns, no returned payments, and even a modest savings habit, that tells a completely different story. It tells the lender, this person is in control. This person follows through. So while you're building your formal credit profile, protect your banking account too. Set your debit orders to run the day after your salary lands. Avoid your overdraft unless it's a genuine emergency. Move even a small, fixed amount into savings every month, 200 Rand, 300 Rand, whatever is realistic for you. The amount matters less than the habit. Your banking record is your financial character reference. Make sure it says good things about you. Step 3. Get a low-limit starter credit card. Once you've had your retail account open for a few months and your banking record is clean, it's time to consider taking the next step, a starter credit card from your bank. Most of the major South African banks offer entry-level credit cards with low limits specifically for customers who are new to credit. Capitec, Absa, Standard Bank, FNB, and Nedbank all have products in this space. The limits are deliberately modest, often starting anywhere from 500 to 3,000 Rand, and that's actually perfect for what you're trying to do. You're not getting this card to fund a lifestyle, you're getting it as a credit-building tool. Use it for small, regular expenses, your monthly airtime top-up, your streaming subscription, your grocery run on a Friday, basically things you are going to spend money on anyway. Then, when your statement comes, pay the full balance, every month, without fail. A credit card that you use regularly and pay in full carries more weight with credit bureaus than one that sits in a drawer. It demonstrates active, responsible credit management. It shows the system that you can access credits and choose not to abuse it. And here's a number to keep in mind. Try to keep your credit utilization, that's the percentage of your limit that you're using at any time, below 30%. So if your limit is 3,000 Rand, try not to carry a balance above 900 Rand. Lower utilization signals financial discipline, and the bureaus reward that. One account, low limit, frequent small purchases, full monthly payment. That's the formula. Step 4. Never miss payments, not once. If there is one non-negotiable rule in building a credit score, this is it. Your payment history is the single biggest factor in how your credit score is calculated. In South Africa, as with most credit scoring models globally, it accounts for the largest portion of your overall score. One missed payment, just one, can set your progress back by months. A string of missed payments can take years to recover from. And we're not just talking about your credit card and your retail account. We're talking about every single payment commitment you have. Your cell phone contract, your gym membership, your insurance premium, your municipal account, any subscription that's linked to a debit order. If it's a formal payment obligation, it has the potential to appear on your credit record. So here's the practical side of this. Automate everything you possibly can. Set up debit orders for every recurring commitment and time them to run the day after your salary hits your account. That way the money is gone before you've had a chance to spend it elsewhere. If you know a difficult month is coming, maybe you've had an unexpected expense, contact the lender before you miss the payment, not after. Proactive communication is always received better than a missed payment that you explain after the fact. Treat your payment dates like they are the most important dates in your calendar, because when it comes to your financial future in this country, they genuinely are. Miss nothing, pay everything, on time, every time. Step 5. Check and protect your credit report. This is the step most South Africans skip, and it can be the most costly mistake of all. In South Africa, you're legally entitled to 1 free credit report per year from the registered credit bureaus. TransUnion, Experian, CompuScan, and XDS are the 4 main ones. You can request your report directly from their websites, and it costs you nothing. Why does this matter so much? Because errors on credit reports are far more common than most people realize. An account you paid off 2 years ago still showing an outstanding balance, a judgment linked to your ID number that belongs to someone else entirely, a default that was listed incorrectly and never removed. These kinds of errors sit silently on your profile and drag your score down, and you won't know they're there unless you look. If you find something that's wrong, you have the legal right under the National Credit Act to dispute it and have it investigated. The Bureau is required to respond. Beyond errors, there's another threat: identity fraud. Credit fraud is a growing problem in South Africa. Someone gets hold of your personal details and opens accounts in your name. By the time you find out, there's already damage on your record that takes time and effort to clean up. Checking your report regularly is how you catch this early. Set a reminder. Once every few months, pull your report and go through it line by line. Know what's there. Know what shouldn't be there. Your credit report is your financial identity document. Guard it the same way you guard your ID book. So, let's bring it all together. Open one small retail account and use it responsibly. Build a clean, healthy banking record. Get a low-limit starter credit card and manage it with discipline. Never miss a single payment, not once, and check your credit report regularly to make sure it's accurate and protected. 5 steps. None of them require you to go into dangerous debt. None of them require a big income or a head start. They require consistency, patience, and the decision to take your financial life seriously. Because remember, you don't need lots of debt to build a credit score. You need responsible payment history. And that is 100% within your control, starting today. Drop a comment below. How did you start building your credit score? Retail account, first card, or mistakes along the way? Share it, because someone watching this is exactly where you started, and your experience might help them get going. If you're not subscribed yet, hit that button now and turn on notifications. New content drops every week, all of it built around helping South Africans take control of their financial lives. I'm Ryan, and I'll see you in the next one.